Hello, everyone, and welcome back to the J22 report. I'm your host, Johnnie Market. You all know that drill. Hit that like button and subscribe if you already haven't. Just a little disclaimer, nothing said is intended for financial advice. So read the disclaimer below, the full one. This is just, my thoughts on the market and what's happening, what's going to happen. But consult a financial professional before investing and do your own research and make sure your decision is yours and not somebody else's. So, and I can't guarantee performance. So anyway, let's get into today's. I'm going to share my screen. Let's see, there it is. So yeah, if you look at the markets today, the Dow Jones, that finished negative territory today, but the S&P, that was up 28 points, NASDAQ, and gold has the theme that had a big day. If you look at the GLD, and it finished near its highs. If you look at that, 2.43 on the GLD, and it's had a very strong day. Let's go into the economic data. Let's see, if you look at it, mortgage applications, those are down 2.6%. Challenger job cuts, whatever, that's not. Look at this, the employment change, ADP, that's payroll, up 150,000. That's less than the forecast 160,000. Look at the 160. You can see I'm going to the mouse. Trade deficit, obviously 75.1 billion, less than expected, but I don't even think that matters. But the employment's not good. And the S&P Global PMI is actually very good. But if you look at the ISM Services PMI, that's in contraction. Factory orders down 5% month over month. And if you look at the ISM services, remember we're a 70% service economy. 49.6, that is another contraction. Previous was 61. So if you look at it, this is not good data today. A lot of it's negative. The employment, the ISM services, continuous jobless claims. Yeah, those were way above consensus. 1858, 1840. And of course, job cuts. If you look at it, this is very poor data in that. And of course, if you look at how gold did, we'll just go to Kitco and gold, and then one day you look at it, see where the time is. Of course, they can't do it. They have to do 18. It's like 34. But if you see, it's up. So, well, you saw with the GLD. I don't know why they can't just have the closing price and the asking price. But let's go to finance, look at GLD, as I showed you before. Right there, 1.13%. That's quite a gain. 2.43 in the GLD. Looking at coming up, and if you can see right up here, there's an up. So let's get into a couple of articles, which also shows. Look at this: Yahoo Finance wage growth nears 3-year low in June as labor market enters different regime. So if you look at it, more things, the economy, pay increases for American workers have continued to fall from highs reached during the post-pandemic reopening. Yeah. The Fed declared war on wages, and that's why the Fed declared war on wages. And that's true for folks keeping the same job as it is for those finding a new job. So yeah, they're trying to go after job jumpers because heaven forbid they get a fair increase in work. Annual wage increases for workers who stayed at the same job increased at the slowest rate in nearly 3 years in June. For job changers, annual wage increases slid for the third month. Yeah, so there you go. Wages are declining, meanwhile prices are rising. One's going to give, and I think it's the prices rising that's going to give, not the wages declining. So we're in a different regime where we've been in the past, where the job stare growth is either flat or even rising. So if you look at this, uh, yeah, as you can see, overall labor market has largely shown signs of moving off the boil, but not entering rapid cool down. So it's one way of saying that, yeah, jobs and wages are not doing well. So layoffs remain low. Well, reported layoffs or whatnot, but everything I read is like a layoff. It's not in the numbers. So here's some other thing that shows Amazon Bezos unloads nearly 5 billion in company stake, and this is July 3rd. See go down. Sold 25 million company shares for $4.93 billion. So let's see, nonprofits, who cares? Bezos has now earned 7 billion from selling Amazon shares year to date after selling 12 millions in February. So yeah, if you look at this, why is he selling? If this AI boom's so real, Amazon would be the one tech company would be one of the biggest beneficiaries. So yeah, and of course, spy last week, $500 million yacht cruising around Greek Isles. Celebrities such as Kardashians, yeah. So obviously he knows something. Owner of Amazon, he knows the U.S. consumer is tanking. And here's the other thing. Here's another thing that really shows what's going on. Home affordability in the US sinks to lowest point since 2007. Well, what year comes after '07? Yeah, I think I know. '08. So, and what happened in '08? I think let's just say just Google what financial thing happened in '08. See what their AI. Oh, there it is, the financial crisis in '08, the United States. So yeah, here it is, home affordability in the US sinks to lowest point since '08. So '07, prices and other expenses outpaced incomes. This is Bloomberg News. Buyers in West and Northeast faced biggest affordability. Of course, I can't read it. I'm not paying for this propaganda. But here we can see this. Owning a house is less affordable for average earners in the US than any time in 17 years. And of course, yeah, I can't put this on the paywall. So, and to show how bad the economy is, this is another thing. Bob's store closing all retail location. Bob's store is slashing 30% to 70% of its prices during going out of business. So let me get this out. I don't know much about Bob's store, but it's out of business. And I don't think it's solely due to the merchandise. I think consumers are New York, New Jersey, Massachusetts, Connecticut. Inability to secure finances needed to maintain operations. So yeah, there it is. It probably all borrowed. Let's see. I didn't really. We regret that. The liquidation of Bob's stores. Bob's was a stalwart of our local communities for 70 years. So yeah, very sad. 70 years. Uh, it will allow exchanges through July 14th. Top selling brands will be discounted. So there you go. If it's been open for 70 years, it's not quality. It's not online. It survived the Amazon. What it is yeah, consumers are cutting back. They can't afford to live. So, and speaking of propaganda, can't believe this. Number 45 is already pushing interest rates up. What's pushing up interest rates is the Fed is raising rates. Uh, Financial markets don't set the price in election outcomes a month or two before. But they're getting an early start this year. So let's see. Of course, if you look at it 5-day, you can look at interest rates here, 4.3290 and then 4.3550. It's not really that much. 1 month, you look at it, bottom 4.3610, 4.3551. But if you look at over a 5-year mark, down, 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 then if you starting in 2020, interest rates started going up. They keep going up 2021, 2022. And then look at 2023. And this was sort of the peak. Came down, but it started to go up some. So look at it, interest rates have been going up. It has nothing to do. This is a 5-year chart I'm doing. Has nothing to do with the presidential elections or debates. So yeah, this is just BS article. I'm just showing you the propaganda. It's going up. Interest rates are going up because they're going up. But yeah, anyway, just going back, you can see bad economic data. We have a strong gold price today. Markets are mixed. Dow didn't even finish up. And the other thing too, I wanted to talk about, the Dow still hasn't hit over 40,000. So I wonder if that's a strong top, but we'll see. Could break through in the blow off top. But that's all I have for today. Hit that like button if you haven't, subscribe, and I will see you next video.